You're live. Welcome to Money Chat Now. I am your host, Larry Steinhouse. Today is 9/22/2021. That's right. It is Money Chat Now, and I'm your host, Larry Steinhouse. Just remember, if you like the show, hit that share button, hit that like button, and let me know you're enjoying it by leaving comments and getting involved. I'll be able to see your comments if you leave them on YouTube. I'll be able to see your comments if you leave them on Facebook, on LinkedIn, or anywhere else. So feel free to leave your comments and let me know that you're watching the show and that you like it, of course. Don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. And of course, Money Chat Now is brought to you by Investor Schooling. You can attend a complimentary class tomorrow night, Thursday night, tomorrow night. You can learn about real estate investing, stock options trading, and you can learn from those who do it every day. So on today's show, we're going to be discussing the market update. Ooh, nice market today. We're going to be talking about the Fed report. We're going to be talking about the fact that Facebook stock plummeted. We're going to be talking about Fed insider trading. Oh, I love that. We're going to be talking about the Evergrande problem. If you haven't been paying attention lately, we need to teach you and get you up to speed on what's going on with Evergrande in China. And then, of course, the wrap-up. So, wow. The Dow and the S&P, it was like, whoa, what the heck happened? It was insane, right? It was one of those days that gets you excited about the market. It started off high and it just kept going up and up and up. And as we reach the end of September and start approaching earnings season, we're going to see a rise in the market. And I'm going to tell you it's going to go really, really good, and look for opportunities here to buy and buy them. The Dow finished up 340 points. At one point, it was up 450 points. The S&P finished up almost 42 points, and the NASDAQ 150 points. Wow, that's just a great day. That's the kind of days that we really enjoy being stock option investors or stock investors. Let's talk a little bit about what happened today and what the Fed report said. And that is all about the interest rates and tapering. So the Fed decided to keep interest rates low in an attempt to keep the economy and the stock market from tanking. By the way, I've been saying this forever. I personally believe that this is a continued mistake for the future. However, it happens to be great for the stock market, and it'll probably be great for the rest of the year. So as long as they keep the Fed rates low, and as long as they hold off on tapering, the stock market's going to keep going up. The problem is when they go down, or when they change it, or when they raise interest rates, it's going to be tough. So after holding the benchmark interest rate near zero, they indicated that rate hikes could be coming sooner than expected, and it significantly cut its economic outlook for the year. So now, this is the continuous bizarre stuff of the Federal Reserve. They're basically saying that the economy is not going to do so well this year, so they don't want to raise rates, they don't want to do anything to stop inflation, and that's why the stock market popped 450 points. When you can figure out how to put those two together, you'll be a genius. Officials on the policymaking Federal Open Market Committee indicated that they will start pulling back on some of the stimulus the central bank has been providing during the financial crisis. There was no sign, though, as to when that might happen. So the question is, when is it going to happen? Is it going to help anything? Is it going to take too long? Is it going to not take too long? Members of the Fed now see the first rate hike happening in 2022, about the middle of 2022. In June, when members last released their economic projections, it was a slight majority put the increase into 2023. So they're actually saying, hey, we might increase sooner than we expected. The committee now sees GDP rising just 5.9% this year, compared with the 7% forecast in June. However, 2023 growth is now at 3.8 compared to 3.3 previously, and 2.5 in 2023, up 0.1 of a percentage point. The real key numbers here, though, you need to understand, are the numbers that say that we are going to be at 2.5%. And that's what we have to worry about. So, and not worry about, but understand that they're saying that it's not going to be a mess as it's been in the past. And the mess in the past has been 7%, 8% rates or inflation, and now it's not going to do that anymore. So 2.5% in 2023 is going to be good. We will see. We'll see what happens, but as long as it stays in those numbers, we should be okay. And we'll find out. Okay. And by the way, that's why the Fed isn't changing its interest rate. We can keep the status quo if the economy and inflation in the next few years will be great if we keep the status quo. However, I'm seeing signs of weakness, such as the stock market has been, for the most part, stopped rising. Now, yes, we had a really good day today, but it's still kind of flat. And when it's kind of flat, that's going to be a problem. The unemployment and lack of workers issue will also be a weird dynamic that can affect the near future. Let's talk about my favorite stock. Or, I don't know if my favorite stock, but let's talk about Facebook. By the way, did I call it or what? I've been saying Facebook was going to drop and it was going to go down, and I said that we'd be approaching 335, and sure enough, it dropped 15 points to put it close to my buy number of 335. It faltered as low as a little higher than 340 at one point. By the way, this is a play, and I've been telling you about the Facebook files and the negative articles in the Wall Street Journal, and they've been publishing this, and I told you they were going to drive the stock down for possible profit. Yeah, right. Like, we don't know why they're driving the stock down. Well, today, an article outside the journal, it was mentioned that Facebook told advertisers in a blog post it underreported ad performance on iPhones, citing privacy changes Apple made to its iOS operating system. So basically, here's what's going on. Basically, the new iPhone, or the new iPhone iOS, I think it was version 14 or 13 and a half, whatever it was, it doesn't really matter. They made it so that you have to opt in on tracking. So if you have a Facebook app and they track you, they're going to give you ads, and they're going to give you relevant data to where you are or what you're doing or who you are. I mean, for example, if you're a Republican, they're going to send you Republican stuff. If you're a Democrat, they're going to send you Democrat stuff. But if you opt out of tracking, they don't know who you are anymore, so they don't know what to put in front of you. So Facebook doesn't know what to put in front of you. So they've been saying that it's going to be a problem, and the ads are going to the performance of the ads are going to be a problem. So the interesting part is, Investor Schooling, the company I own, we use Facebook all the time, and we're constantly running ads. And I'm going to tell you, the first month was terrible. We noticed a weakness immediately, but we've also noticed that as we started to change the way the ads were done, it became not really much of a problem. They've already said they're working on improving ad performance measurement, including by accelerating investments in reporting gaps ahead of the holiday season. Now, here's the kicker. Why did Facebook drop 15 points today? It actually makes no sense. Facebook is telling us that the ads will perform less than they have. Isn't that a good thing? So basically, they're saying that they're going to perform less, but they're actually going to perform more. So basically, undercharge and overdeliver is a great business mantra. If they expect to overdeliver, then why did the stock tumble? Look, this is typical of journalism masturbation. What they do is repeat an article or sentiment from the past that spooks the investor. As a follower of Facebook stock for the past few years, Facebook has also often exaggerated their ads or even their video play performance, if you remember a while back. Usually it was a higher metric. This time they're clearly saying it's a lower metric, or in other words, please advertise with us again because we can make a difference. Here's what goes on. The stock tanked because the market is waiting for the other shoe to drop. What else are they going to lie about? I mean, Facebook lies all the time. By the way, I can think of quite a few lies that Facebook puts out there, like, COVID and vaccines and Republicans and whatever. Anyway, I find it fascinating that this article also comes out the day after the launch of the new Facebook portal, which helped raise the stock price yesterday. Can someone say that maybe somebody bought a bunch of puts yesterday? Yeah, I'm going to go with that. I'm going to think that somebody bought a bunch of puts yesterday, and that's basically what happened. All right, let's take a quick break, and we'll be right back.
Okay, so you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falk Falcone and Larry Steinhouse about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend investor schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. Investorschooling.com.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and so far we've been discussing the market update. The market right now, the Dow ended up about 340 points. It was up as high as 450 at one point. We talked about the Fed not pulling back any money, or I'm sorry, not raising interest rates. We talked about the fact that Facebook stock plummeted on ridiculous metric news, which doesn't matter, and I think it's also a great play because of that. And let's get into something interesting, something that I call Fed insider trading. Now this is interesting because, well, let's talk about it. So Federal Reserve Chairman Jerome Powell said on Wednesday that the central bank's current trading rules are insufficient and promised it would make changes. After filings showed that officials traded stocks and bonds that could be influenced by its policy actions. Yes, by its own policy actions. Specifically, Powell said that Fed officials should, as a general rule, be barred from owning assets that the central bank purchases as part of its regular asset purchase and emergency liquidity measures. 2 weeks ago, financial disclosures filed by the Fed's 12 regional bank presidents revealed some of them had traded frequently throughout 2020, while others held million-dollar positions without material changes to their portfolios. You gotta love this one, really, seriously. You gotta understand. Check this out. The Dallas Federal Reserve Bank's Code of Conduct states, and I quote, "An employee is prohibited from using non-public information for any purpose other than bank business. In addition, an employee may not engage directly or indirectly in any financial transaction as a result of or in reliance on non-public information, whether such information relates to the bank or any other person or institution." Yes, folks, the elite masters don't have the same rules as the common folk. If I used information like the information they were exposed to in a real company, so in other words, if somebody had a real company and they were using information inside the real company, it would be called insider trading and they would go to jail. Jail. These guys at the Fed are encouraged not to do this, or someone might find out and say, "You shouldn't do that anymore." And basically nothing happens from there. Wow, man, I was blown away by that. The rules are definitely different for you and me, and hey, that's the way it's going to be. So at least they could call me up and tell me what they're going to buy and what they're going to sell. That would be amazing for me. All right, let's talk about the Evergrande problem. So I don't know if you guys know what's going on with Evergrande, but first of all, let's talk about who Evergrande is. Evergrande is literally one of the biggest, actually it is the biggest holder of real estate in the world. Now, they borrowed very large sums of money. I haven't been able to find out the exact number, but let's put it this way. They need to make a $76 million interest payment to the bondholders, and they're struggling to make this payment, and that's what's going on. That's what tanked the market, or spooked the market on Monday and Tuesday. And if they miss this payment, it could cause a serious weakness in the market. Many have compared it to the Lehman Brothers bankruptcy, which was the beginning of the trigger to the 2008 financial disaster. By the way, Evergrande actually negotiated a payment and will be able to pay that payment, and this relieved China markets and set the Dow up for the boost that we saw today. So part of the Fed, part of Evergrande, and part of the Fed are the reasons that the market went up today. So basically, let's talk about this. How will this end? Personally, I believe it'll be forgotten in about 2 months. I also believe this is a situation that will put the president of China on notice that he needs to either stop or slow down the movement to pure socialism. We'll see what happens, but I believe that that's going to be the best thing for him. I look forward to finding out what happens. You know what? Let's take a quick break right now, and we'll come right back, and let's find out how you can win Phil's car.
Hey, if you were listening to Investor Schooling Live today, I'm Phil Falcone, and I made the decision today on air that I'm going to be giving away this car. You want to take a look at it? Let's do it. How would you like to pop your top without ever getting out of the car? Huh? It's pretty cool. You can do it at a red light. You can do it when you see it rainy. You can actually even do it when you're driving, as long as you don't go maybe faster than 10 miles an hour. So I am giving away this car. Why? Is it because I'm crazy? Is it because I'm rich? Is it because of both? Take your pick. I don't care. Let me tell you about the car. We're going to have a contest. We're looking for real estate investors to go to our website and give us a real estate tip. And you can have people that you know vote on the site about which real estate tip is the most quality, most valuable to them. So let's just say that our contest is going to be looking for quality real estate tips and for votes. So you need to get your friends, your family, people who care about you, and real estate investors who are willing to go on the site and vote for it. And I will give you this car.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, did you watch that last commercial? Did you see the stalker in the back of the... Oh, never mind. I'm not going to get into that. All right. So far, we've been talking about the market. We've been talking about the fact that the market is up about 340 points today. We talked about the fact that the Fed report basically said that they're not going to be raising interest. We talked about the fact that Facebook stock plummeted on ridiculousness, and I think that's an awesome play. We talked about Fed insider trading and how they probably will continue insider trading because their punishment is don't do that again. Really, that's their punishment. And we talked about the Evergrande problem, which is what's going on in China, being the largest real estate holder in China, or actually in the world, and they had an interest payment that they needed to make and they couldn't make it, and things got really rough for them, and how I think it's not going to be a problem in the end. All right, let's talk a little bit about what else is going on today. Let's just basically wrap it up. So I want to talk a little bit about crypto because this is kind of interesting. You know, I follow crypto a little bit. I follow it mostly for fun. I'm not a big crypto player, but I follow it for fun. And right now, if you take a look, Bitcoin is up today, and Bitcoin's up right around 43,000-ish, and it's pretty good. And Ethereum is still hovering in the $3,000 range. But here's what's really interesting about the crypto market. The Federal Reserve Chairman, Jerome Powell, said he's made no decision on what the central bank digital currency should be. So apparently the Fed is considering a cryptocurrency alternative. The Fed is actually pushing ahead with a study on whether to implement its own digital currency and will be releasing a paper on that study shortly. Basically, I'm going to tell you right now, I'm looking forward to this paper, and I'll bet the insider traders of the Fed have already set up their positions and the currency they're looking at. Rewind this video if you forgot what I said earlier, and you'll understand exactly what I'm talking about. All right, let me talk about my big play for the day. I'm going to tell you Facebook is the play. If Facebook stays in these levels, in the low 140s, and goes below 140, which I'm hoping it does, I'm hoping it hits 135, it's going to be a massive play into earnings. I would also still look for some small dips in Apple and Twitter. I would look for some small dips in Coinbase and Hood. Hood was up about 2.5 points today. That was pretty good too. Again, because if crypto moves down, both of those guys are going to move down with it, and it will be a great play for you as long as the options aren't too expensive. I also watched some of my favorites go into a breakout pattern today. CCL, ACL, and BA, Boeing, all went into breakout patterns today, which is fantastic, which means they're going to start rising, hopefully start rising, but most likely they will. And by the way, I really like BA, and I would look for it to rise about 20 points before earnings. So I want to thank you once again for watching Money Chat Now. Don't forget to hit that share button, hit that like button. Don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Of course, from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. Thanks for watching Money Chat Now, and we look forward to your continued support. We'll see you tomorrow at 4:03.